we released our results yesterday. We would consider the year probably one of the most difficult that we've seen in over a decade, caused by the distractions around the housing market, falling housing prices, decrease in churn, and plus a really disruptive election that did really hurt the second half for us. So sales increased by 2.5% to 241.8 million. Gross profit margin was healthy at 64%, albeit that was a little bit lower than the record we achieved last year of 65.7%. The group held expenses relatively well, in line with the previous year at 52.4%, which is pretty good for being such a tough year. And EBITDA came in at 29.7 million, which is down 3.4 million or 10.4%. Comp sales declined by about just over 2% throughout the year. The business invested in 5 new company stores. We purchased 2 franchise stores, and we completed our first major property acquisition, which was our new distribution centre up in Queensland. That's going to service our Queensland and New South Wales stores, plus our roadway business and our Queensland commercial business. So that was quite a big investment for the group. Throughout the year, we continued to strengthen our marketing presence. We had further investment in advertising, and we released a lot of new products to keep our customers excited. Throughout the year, we also focused in on 6 key growth strategies. I'll go through some of those. So number 1 was brand and customer. We have 113 conveniently located stores around Australia. Our next nearest competitor has 6. So we do have a dominant position in the specialty lighting category. We introduced 28 Beacon Design Studios into those stores. We focused on training our team to be the best lighting designers, and we have 333 accredited lighting design consultants across the business. We have the largest range of products, over 3,000 items, and we're constantly refreshing that every year. So 20% of that gets refreshed every year. We have great exposure through our partnerships with shows like The Block, House Rules, Selling Houses, and Sunrise Weather in the morning. And we've embarked on selling a lot of smart lighting now, which should offer good growth for the future. Number 2 is our store optimisation. We have since 2014 added 31 new company stores. Given our stores have about a 6-year maturity cycle, we see that these stores still have the opportunity to reach maturity over the coming years. We continue to refine all costs within the business, and we've had a bit of a focus around rostering and making sure that our rosters cover the traffic flows appropriately. Our light and power costs dropped throughout the year, which was really a function of being smarter with our energy use throughout the year. Number 3 is store rollout. Throughout the year, we opened up, as I mentioned, 5 new stores. All of those stores traded above expectations, above management expectations. So it shows that even in a tougher retail environment, we can open up new stores which still perform well. The market research that we conducted still has us at 175 stores in the network. We will cautiously open those stores depending on the market conditions at the moment. New product ranges. Number 4, the product that we offer is obviously a huge reason why customers choose Beacon Lighting for their lighting needs. We released 600 new items throughout the year, and each of those items represent value, innovation, quality, and style, and that's the 4 pillars that we always have to focus our product development on. Number 5, online. Online continues to be increasingly important, with sales growth of 22% throughout the year and making up 5.5% of retail sales. And even in the tougher retail conditions that we experienced, to be able to grow that area by 22%, I think was a pretty good result. And you know, the online really supports the bricks and mortar stores, as a lot of those sales will get pushed through, particularly with click and collect becoming more and more popular throughout the year. Emerging businesses. When the business listed in 2014, we were mostly a retail lighting business and a commercial lighting business. We've been diversifying the business into new areas. So roadway lighting and globes under the GE brand increased their sales by 50%. Beacon Energy Solutions, which sells commercial solar systems, increased their sales by 50%. Masson for Light, which sells architectural fittings into commercial and domestic projects, increased their sales by 30%. And Beacon International, which has huge opportunities across Europe, USA, and China, increased their sales by 50%. These younger businesses require investment in the early years, but as a group, we saw improved sales of 43% across the group of emerging businesses and improved profits of above 59%, showing that they really do have great momentum. The outlook for the year ahead, we're only partway into the year, obviously, and whilst comparative sales are still not positive, we must note that the July we've just gone through, was a more difficult month as it didn't compare well with the previous July. The previous July included sales from the end of financial year sales, and that is always a really strong sales period for us, and they were in that last year's July, so we were cycling those results, whereas those results actually fell into June, which improved the results for June. So we had a good June, we had a poor July, and we have a really encouraging August at the moment for the first 3 weeks of August. So, we're pretty, if July wasn't there, we'd be even more confident, but with the results that we achieved in June, and in particularly right now, with a better comparative against August, we're pretty confident with the way the business is performing. The group will acquire the Myrie franchise store in WA, and that's a reasonable size franchise store that we'll be acquiring, and they'll be completed in September, so they'll be good to bring back to the group network. We've have 2 new stores allocated to be opened this year, which is one in Virginia and Queensland and one in Belmont in WA. We continue to invest in our e-commerce channels, so we're going to be re-platforming all our e-commerce sites, and that's really to improve our user experience and obviously build greater sales through those e-commerce sites. That's a reasonable investment, about the same as opening up a new store, is to rebuild our online assets. We believe that whilst we've had 18 months of relatively difficult trading due to the negative influences on the housing market plus the very disruptive election, we believe that there are more positives now than what we have previously seen. So we now have very low interest rates with 2 cuts that have just gone through recently. Bank lending has been relaxed a little, tax rebates are starting to flow through to consumers, and there's greater support for new home buyers, and we're starting to see some positivity in the housing market. I think, with the changes that have been made of recent, the conditions ahead are looking much more favourable than what we've had previously. And the biggest issue I think for us was in the second half was the federal election. It was absolutely distractive, and for that 2 months, we really did see a knock to the sales, which really ended up hurting the entire half for us. And now that is clearly out of the way, and we're starting to get hopefully some clear air and back into a bit of normality from spending from consumers. So I think, with the position where the economy is and with our growth strategies in the dominant position that Beacon Lighting is in, we should see a successful year in financial year 20.